What if I told you the way we pay property taxes in UK could completely change? What if capital gain taxes increases? And what if companies like Amazon started paying significantly higher tax? These are some of the ideas being discussed by politicians and tax experts. And if any of them become applicable, it would impact the life of homeowners, landlords, business owners, and many other people. Today, in this video, I'll break down these ideas and explain how it could impact our life. Let's get started. Let's start with property tax. Many experts believe that current system is outdated. At the moment, homeowners face two major types of taxes: council tax and stamp duty. The council tax is based on the property valuations from early 1990s. And we all know that the today's market value has completely changed since then. For example, imagine one person owns a house worth 300,000 in Manchester. Someone else owns a property worth 3 million in London. Common sense says the owner of 3 million property should pay substantially more council tax. But under the current system, the difference is often much smaller than people expect. That's one of the reasons many economists believe that reform is needed. Now let's talk about stamp duty. Stamp duty applies when you buy a new property, and it could mean for many people paying thousands of pounds in tax. Many economists do not like stamp duty because it restricts them from moving to a new house. Example: imagine a retired couple living in a large 4-bedroom house. The children have moved out and they would happily move to a smaller property. But moving would mean paying stamp duty, legal fees, and moving cost. As a result, they stay where they are. That means fewer family homes become available for younger families who need more space. The second area to watch is capital gains tax, often called CGT. This is a tax you pay when you sell an asset and make a profit. For example, let's say you buy shares for £20,000. A few years later, they are worth £50,000. You decide to sell them. You have made a gain of £30,000. Currently, capital gain tax rates are lower than income tax rates. And because of that, many experts believe that government may look into this area and increase the capital gain tax rates to have additional revenue. But it is not that simple. If investors believe that tax rates are going to increase, they may rush to sell all the assets. And the plan of government may not work and investors will sell all the assets at lower rate. So if future reforms are needed, they need to plan carefully. The third possible change is often called the Amazon tax. The idea behind is that the local shops, cafes, and other businesses feel that they have a higher burden of taxes and costs than the large retailers, the large online retailers. And one proposal is that to reduce the business rates for local businesses and pass the burden to the online large retailers. For example, a local cafe could save thousands of pounds each year and invest that money into more staff and expanding their business. But downside is that the large retailers the extra burden may pass on to their customers, and ultimately the consumers will have impact of that extra cost. Nobody knows what changes are coming, but capital gain tax, property tax, and business taxation are the areas worth watching. If you are a homeowner, landlord, or business owner, a small change in the tax rate can impact significantly on your finances. What do you think? Would you support replacing council tax? Let me know in the comments below, and don't forget to like and subscribe for more UK tax related videos in simple English. Thank you.